Good morning, good evening, good afternoon, everybody. Welcome to the Finance Rebel Show. This is the show where we talk about all things money so we can help increase your financial IQ. So we talk about things like stocks, investments, bonds, real estate, taxes, business, so forth and so on. If you are just joining, please be sure to share, like, and comment and join along in the overall conversation. Today, we're going to be talking about the top 10 stocks, the top 10 best stocks of the last decade. So just to be fully integral and transparent, I saw this article today while reading Barron's, and I thought it was interesting. Again, the top 10 stocks, the top 10 stocks of the last 10 years of the last decade, is by Jack Hugh. And again, I thought it was really, really interesting. So I said, you know what, I'll talk about it with my folks, my fellow rebels today. One thing that's really interesting, just to kind of give you a little primer on it, it's only the top 10 of the S&P 500. So we'll be talking about the S&P 500. And guess what? Guess what today's financial term of the day is? The S&P 500. All right, so today's financial term of the day is the S&P 500. Now, what is the S&P 500? The S&P 500 is a financial or stock market index. It's basically a collection of stocks. It's the 500 largest U.S.-based stocks. So the technical term is it's a stock market index that tracks the stocks of the 500 large cap U.S. stocks. Now, what's a large cap stock? Large cap stock is typically a stock that has a valuation or it's worth more than $10 billion. You'll see a couple of different definitions out there, but for the most part, it's 10 billion plus. So talking no cash, Visa is not in the top 10. So as everybody knows, I am broadcasting live, same time, YouTube, Facebook, and Instagram. And so, you know, we're going to break down a list now, right? And I'm going to do it in reverse order, starting with 10, going all the way back down to 1. I think you'll find the list very, very interesting. It's not going to be what you think. It's not going to be what you think. So the very number 10 is Old Dominion Freight. And so I got a list here because I can't remember everything about all of them, but Old Dominion Freight, ticker symbol ODFL, right? Current stock price is $185.85. It is roughly I want to say it's a $15 billion company. You know what? Let me look that up real quick. I didn't look that one up at first. But again, 188, it's a $15 billion company. $15 billion company. Now, had you invested $10,000 in this company 10 years ago, your money would now be worth $137,693. That's a nice piece of change. That's basically a 13-fold increase. It's 13-fold increase. Now, I get commentary sometimes that the numbers I use are a little bit too big. So I just said, all right, well, if it was $1,000, right? If you'd invested $1,000 in ODFL, Old Dominion Freight Line, it would be worth $13,769. All right. Trucking company, nothing special, nothing sexy, over 20,000 employees, right? So they do trucking locally, interstate, regionally, and nationally. So again, you can make money anywhere. It doesn't always have to be super duper sexy. But you just have to figure out a way to kind of corner the market and provide value. And you see that stock has done extremely, extremely well. Now, with everything was going on with trucking, I don't know if I would expect them to win the next decade. I don't know that I would expect them to be, to have such a great rate of return over the next 10 years. Why? Trucking's changing. If you look at what Tesla's doing, and actually many, many other companies, they have driverless trucks. And I believe there's actually driverless trucks on the market right now. I I read a report somewhere. I read so much stuff sometimes I forget, but I believe they shipped something from California to Pennsylvania either last week or week before. I'll have to go back and try to find that. But it's here. It's not going anywhere, right? So automation is something we all should be thinking about. I've read another article the other day that like 600 plus trucking companies went out of business. Now, trucking is in like this weird space though, right? Because you have the driverless, the technology, the automation coming forward, but there's still not enough truck drivers on the market to really satisfy the need and demand that's going on in that space right now. So, just something to think about. All right. So number nine is Ulta Beauty, $14 billion company. So Ulta does beauty, cosmetics, I believe some hair things. I think I told y'all one day that I actually bought my daughter a share of Ulta stock for her birthday. Christmas is right around the corner. I would encourage you all to look at stocks as great Christmas gifts or holiday gifts for your children and your loved ones. Not trying to spoil anybody's holiday, but think about it for a minute. When you buy gifts, the toys, a lot of times, the kids are usually done with them in about a week. So then what? So you spend all this money on the toys. They're not playing with them. They're just sitting somewhere, gathering dust and just being all junky and cluttersome in your home. Maybe instead of buying all the toys, buy half, right? And spend the other half on some stocks. Doesn't have to be anything spectacular, and glamorous. They'll be happy with whatever you get them. A lot of times we let our ego get in the way or let our ego promote what we're getting for Christmas. And then oftentimes we are not fiscally responsible or financially responsible with our money. I say gift stocks. That's the gift that will keep on giving, especially if it's a dividend stock. All right. So Ulta is currently $250. Had you invested $10,000 in Ulta 10 years ago, it would now be worth $139,258. If you like smaller numbers, if you invested $1,000 10 years ago, we were $13,928. So again, think about that. With that money that you would have invested 10 years ago, you could probably bought Christmas gifts for the next 10 years without spending any of the money you go to work for. So that would have been all residual dough. All right. Ulta does not pay a dividend. Ulta does not pay a dividend. And I'm going to back up for a minute. Old Dominion actually does pay a dividend. Old Dominion, which was number 10, pays a 0.37% dividend, which is basically 68 cents per share that you own. So for every share that you own, you would get 68 cents every time that they issue the dividend, and that's usually quarterly. All right. So again, Ulta, going back to Ulta is $250.58. And so again, it's been kicking butt. It's a $14 billion company. So it's going to be here for a while. And with Ulta, I don't think young ladies are going to stop wearing makeup. If you go on YouTube, you see people, young ladies, wearing makeup all the time. So I think the cosmetic industry will be here for quite some time, doing well, quite some time going forward in the future. All right. So number 8, Align Technologies, ticker symbol ALGN. It's a $21 billion company that produces medical devices. All right. If you would have invested in Align Technologies 10 years ago, 10 grand, it would now be worth $152,000, $152,980. All right. For those who like to hear the smaller numbers, again, $1,000 invested 10 years ago would now be worth $15,298. It doesn't pay a dividend. Current price is $278.89. Medical device company. Who do you think they're targeting? Who do you think they're helping? As folks get older, they tend to develop more and more ailments. As folks get older, they need more and more things to live a good quality life. And so you're going to see that as we have 10,000 people retiring every day. Excuse me, not retiring, but 10,000 people turning the age of 65. The healthcare sector is still going to be alive and well. And there's money to be made in that sector. And you see that, you know, 15 times earnings or 15 times rate of return. It's pretty good for Align Technologies. Now, I have never heard of Align Technologies, and this is one of the 500 components in the S&P 500. So, you know, again, there's all kinds of stocks and opportunities out there as long as you're in alignment with them and looking for them. You can find good gems. All right. I think this is pronounced Regeneron. This is another one I had never heard of before. Regeneron Pharmaceuticals, $41 billion company. It's a drug company, pharmaceutical company. Does not currently pay a dividend. Current price is $375.62. If you would have invested $1,000 in this company 10 years ago, it would be worth $15,358. All right. If you would have invested $10,000 in this company 10 years ago, it would be worth $153, $582. So $153,582. So, you know, that's sizable. That's very, very good. And again, drug companies are going to be around for quite some time, just because the healthcare industry is going to need more help supporting these older retirees that are coming on. Hey, Vanessa, how you doing? Thanks for joining in. Scott Phil says he's going to buy an LLC. All right, Scott, let me know how you make out with that. Scott is the resident jokester. Okay, so Vanessa Braxton said, yes, I brought my niece AOL stock for a Sweet 16, $150 worth. She is now 40 now and still has it, and it's rolled over to another company. Yeah, I think AT&T wound up getting that because AOL was brought by Time Warner, I want to say, and then Time Warner was just brought by AT&T, and that merger just happened not too long ago. So that's good stuff, Vanessa. Thank you for sharing that. All right. So next one. Next stock is, went to the wrong one. Next stock is United Rentals. United Rentals. Can anybody take a guess what that company does? They rent construction equipment. They rent big haul equipment. All right. Ticker symbol URI. Ticker symbol URI. It's a $12.5 billion company, and they rent equipment, right? That doesn't seem sexy at all. That doesn't seem like, you know, anybody is going to be really interested. If you follow Warren Buffett at all, he says buy good companies, right? Other saying he has is buy companies that a bologna sandwich can manage, or buy good companies that a monkey can manage. He says all those things. Basically saying that KISS, keep it short and sweet, or keep it simple, stupid, right? It doesn't have to be some glamorous rocket ship going to Mars in order for you to make money. Yeah, those are exciting. Yeah, everybody's got the attention. But what's the point of investing at the end of the day? To make more money than what you invested, right? You want to put $1 in, and you want to be able to get $2, $3, $4 out at the end of the day. And clearly, with the returns that a United Rentals has generated, it's phenomenal. So if you had invested $1,000 in United Rentals 10 years ago, it would be worth $16,949. All right, if you invested $10,000, just put a zero behind it, $169,490. That's phenomenal money. That's a lot of money. Doesn't pay a dividend, but again, the current price is $167.33. That's impressive. That's impressive. And I know a lot of times we get caught into the whole thing about trading and try to make money quickly. But those who truly make money, the truly wealthy, are more long-term oriented. All right. For all my newbies, and that's who I really talk to, I tell them to start with a long-term perspective. 5 to 10 years. That's when you should put the money away. That's when you should be looking to get the money back. No sooner than that. As you get to learn the markets a little bit better, then you can start doing some more fancy things. But we got to crawl before we walk, right? When we're on our bike, we usually start off with training wheels before we get to the big bikes. All right, so crawl before you walk. Number 5, a Biomed, ticker symbol ABMD. This company is a $7.3 billion company. Again, it's another medical devices company. All right. $10,000 investment 10 years ago would have been over $200,000 investment. It would have been $202,529. Had you only put in $1,000, you still would have made over $20,000. It'd actually be $20,252. Again, nothing to sneeze at. Current price $162.89. Again, $162.89. Doesn't pay a dividend right now, but they are looking to grow. They are looking to expand, and they have a big market share there. Again, medical devices company. They're going to be able to service a lot of baby boomers. And even those, because we are getting, sadly, we're starting to get sicker, and we're starting to get more of these problems that are plaguing us with our health. All right. Angela Mitchell, Mary Kay, hello to you. How are you doing? Happy Saturday. So next company we're looking at, number 4 on the list. We're almost done, folks. We are almost done. Number 4 is Broadcom, ticker symbol AVGO. This is $126 billion company. $126 billion company. It's a semiconductor company. Basically, it's a tech company. Semiconductors are those things that are inside your phones and your tablets that make everything work, right? They're the thing that makes the computers connect with everything else. So those are semiconductors. Had you invested $10,000 into this 10 years ago, $213,418. $1,000 again, just take the zero off. $21,341. So again, great company. Currently trading at 319. This one has a dividend. Many of them have not had a dividend, but this one has a dividend. It has a 4% dividend. Basically, so with that high price right now, that high stock price, you're getting $13 per share. So for every share you would own of that, or for every share that an investor owns, they get $13 every time that they issue out dividends. All right. So coming down to the wire, number 3, Transdigm Group. Transdigm Group. Ticker symbol TDG. It's a almost $32 billion company. It's an aircraft company. Okay. Usually hear about Boeing or Airbus when people talk about aircrafts and defense and things like that. But this company is a big company. Many people don't know about it. And it's made a boatload of money over the last 10 years for its investors. Doesn't pay a dividend right now. Again, the current stock price is $591.29. By the way, don't let big stock prices scare you, right? It's not about being able to buy, one share or how much ever you want that you think is good. When you're investing, it's all about rate of return. So if you've got $10 to invest, many times you can buy what's called a fractional share. So if you had $10 to buy of that, you can buy roughly like 1% of it. But guess what? That company did from a $10,000 investment, it grew to $218,258, roughly 21 times. So it was $1,000, $21,825. So again, for every dollar in there, every dollar you would invest it over the last 10 years, you would get $21 back. I mean, that's a hell of an investment. All right. Now, if you were just joining us, I'm Kamari Ellis. This is the Finance Rebel Show. Show is all about helping people raise their financial IQ. We talk about all things money, sometimes things that aren't money, but related to money, the softer things. Again, if you are just joining, like, comment, and share this with anybody who is looking to increase their financial literacy or their level of financial education overall. All right. So that is Transdigm. Okay. Next one, number 2, coming down the pike. Market Access Holdings. Market Access Holdings is a $14.2 billion company. It's a financial services company. What they do is they make it easier to trade bonds. Now, not the bonds like your grandma used to have that would, the savings bonds that she would give you on your birthday and holidays. But these are bonds that are issued. These are bonds that are issued by corporations and governments. So they tend to have a hard time being easily traded. This company has kind of come through and revolutionized a lot of that market. All right. So $10,000 investment 10 years ago, $308,000 and 139 bucks. Okay. $308,139. A $1,000 investment will return you roughly 30 times to give you 30,813 bucks. That's a lot of money, folks. That's a lot of money. Current price, $376.32. This company, surprisingly, has a dividend. It pays about 0.5%. So that would equate to about $2 for every share that an investor owned. Okay. Number one. Anybody want to take a guess what number one is? Number one, Netflix. Netflix is number one over the last 10 years. So it's the number one stock amongst the S&P 500 to return. It has the highest rate of return in the S&P 500 over the last 10 years. It's a $147 billion company. I don't think I need to tell anybody what Netflix does, right? It's an entertainment company. It's a company that provides video to consumers at a very easy way. Ms. Park said she would have never thought Netflix would be number one. Netflix has been kicking butt. 10 years ago, $10,000 investment would now be worth $407,254. A $1,000 investment will be worth $40,725. Now, if you see that, that's a 40 times return. Your money grew by 40 times. Ask yourself, what would $10,000 do in the bank for the last 10 years? Now, that's not to be confused with saying that I don't believe in having savings and money in cash, but we do have people who will only invest in cash that will not look at any other investments. One of the biggest reasons why it's important to invest is to beat inflation. What is inflation? It's basically the cost increase of goods and services over the years. All right. So 20 years ago, 25 years ago, when I started driving, gas was 99 cents a gallon. How much is gas now? I paid, I want to say $2.75 the other day. That's an example of inflation, right? When you hear grandma and them and pop and them say that they used to pay a penny for penny candy 30, 40, 50 years ago, it really was a penny. There's no such thing as penny candy right now. All right. So, it's really important because typically the money that you put in the bank does not beat inflation. So you always have to be thinking about that. All right. You want to make that dollar today be more than $1 tomorrow, more than $1 10 years from now. You like 40% returns. I like them. Now, excuse me, I shouldn't say 40% because it's actually more like 400%. It's more like 400% returns. Okay. So we got the list there. So Netflix was number one. Market Access Holdings was number two. Transdigm Group was number three. Broadcom was number four. Biomed was number five. United Rentals was number six. Regeneron Pharma was number seven. Align Technologies was number eight. Ulta Beauty was number nine. And number 10 was Old Dominion Freight Line. Now, again, some sexy. Netflix is kind of sexy, right? Some not. I can't see any investors saying that Old Dominion Freight Line is sexy. It's a trucking company, right? But again, that just shows that you can make money and exciting things and boring things. Sometimes the boring things are actually the better things. Now, here's a point I want you to all think about as you think about investing. One of the benchmarks that's often used to say if an investment is good or bad is if it outdid or underperformed the S&P 500. Now, remember, these 10 best performing stocks are all part of the S&P, right? So there's a whole other 490 companies that are in the S&P 500. So if you'd invested $10,000 into the S&P 500 10 years ago, it will only be worth $35,000 today. That's still good, right? But it just goes to show the S&P 500 is just an average. It is not necessarily the best performance. So you have a mix. So you got some top performers that'll pull everybody up, and then you got those at the bottom of the barrel that are terrible and will kind of pull everybody down. And so the S&P will kind of give you an overall average of what's going on in the overall markets. So I see there's another comment. Okay, everybody's just saying their greetings to one another. And I saw there was a couple of comments. Okay, you do it. My man John said The Watcher is a new favorite show. I'm guessing that's on Netflix. Miss Parker says she missed penny candy. Gas is $2.55 in Columbus. God bless you. Darius out in Seattle says gas is $3.30. Man, I wouldn't want to trade places with you, but I hear Seattle is actually beautiful. I'm going to get out there one day. And 6 Underground. Okay, John, 6 Underground. Super awesome. I've heard that's really good as well. Yeah. So, again, top performing stocks of the S&P over the last 10 years. So just imagine had you had some of your retirement money in the S&P 500 and, maybe one or two of those stocks, just a piece of it. Just think about how your portfolio will be looking right now. I know a lot of people are actually afraid of, hey, Ms. Denise, I know a lot of people are actually afraid of investing in stocks. You shouldn't be. Like Warren Buffett says, the goal is to invest in good businesses. If you can invest in good businesses and you can identify them that are publicly traded, you could potentially make some money. Again, some of these are sleepy, right? But just start with understanding how they make money. We talked about Ulta, which was number 9. Ulta is kicking butt. They're expanding their retail footprint. A lot of people like their product. So if you can just kind of understand from a high level how a company works, how a company operates, how a company actually makes money, what they sell, then you have a strong base to figure out if you think it's going to make money going forward over the next couple of years. Again, investing in the stock market is not a short-term gain. It's not for those who are short-term minded. Ideally, it's for those who can be patient and wait and kind of tuck their money away. Now, listen, if you can't make ends meet, the best thing for you to do is put your money in cash, right? Don't invest in the stock market, because I see that happen a lot of times when people want their money back right away. That's not how it works, all right? The economy goes through different cycles. As you see right now, the U.S. is in this quote-unquote trade battle. The U.S. is dealing with an impeachment. So you're going to see different things impact the market. But those are all short-term blips. Over the long haul, typically the market goes up, all right, and increases and it outpaces or beats inflation, all right? So anybody got any favorite stocks that they like, that they love? Chime in below. But I'm Kamari Ellis, the Finance Rebel. This concludes the Finance Rebel Show. Again, we are in holiday season, so don't get carried away with buying gifts. If you can, invest some of that money. So I will see you all the next time during the next broadcast. Kamari Ellis out.